Hello everybody, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on Monday, March 22nd for a Forex trading and market analysis for the week of March 22nd through the 27th. And before we get into it, just want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. If you have not subscribed to Forex Trading Unlocked yet on Twitch and YouTube, please do so and like and pass us on, as well as hit the notification button so you know when we have new videos coming out. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right, let's get to our live active screen here. Okay, we have the Forex-trading-unlocked.com website pulled up. From the navigation bar, we already hit the workstation tab, and we've already pulled up some charts. So we had the dollar index that ended the week pretty much in a sideways way. As far as, is the dollar strong? Is it weak? There's forces for and against right now, more for it right now in the short run. I think that we will still get a nice big sell-off in the dollar, but not yet for another probably 6 months. Especially with oil coming back a little bit. That's probably why we've seen the dollar stabilize a little bit, because oil has been driving the currency trade in many of the markets, at least sustaining their trend. Not to mention the fact that the 30-year Treasury bonds have finally set at least a short-term low, which every one of those hasn't lasted for more than a week. So we'll see how this one holds and whether or not we get some consolidation there, because both of those things have definitely been driving the dollar trade. Gold, not so much. It came to our targets off of a buy signal we had earlier. So remember that interest rates and even gold are a function of dollar and currency prices. Dollar index, as you can see, is very neutral. XAUUSD, since we mentioned gold, you can see is lower on the day right now, looking kind of sideways, consolidating basically now for 4 trading sessions. We did have a buy signal here, right here, this second bar off of the low. This was a bullish engulfing line buy signal, which you can learn about in the book, High Probable Japanese Candlestick Patterns. Our target range for this was just below 17, I think it was 1747 up to 1770 was our trading target band, which we did step into already right off the bat last week. And then it kind of stopped on a dime. Does that mean that gold is not going higher? Well, remember, it is in a free fall. It's in a lower moving trend. So this impacts with the dollar. So this also moves, especially like the US dollar yen. So since we started with that, let's look at the US dollar JPY. And as you can see, just as gold has stalled, so has the US dollar yen. Now, is there always a direct relationship? Absolutely not. Currently, there is. And also the price of oil. Now, you've had a stalling in gold, you've had a stalling in oil, hence we are buffering up against highs here. I would be very leery right now. Any sell against 109.39 is, if we get a decent correction, is a low risk sell. However, I don't see a very big correction coming off of this. Maybe we get down to 108, 107.5. I doubt we're going to get below 107.5 unless you see a major sell-off in the oil market, as well as a big rally in the interest rate market and the 30-year Treasury bonds. And that would, excuse me, also be precipitated by also a big rally in gold. So I don't really foresee that in the short run happening. I see consolidation in all 3 of those other markets. Remember, I use markets as an indicator, and they're live, so they're not lagging. And as long as those trends right now seem to be influencing certain currencies, especially things like the yen and the pound and the Australian dollar, well, that sets us up for a little bit of choppiness probably over the next few weeks. So, and that's necessarily where we don't see a correction in the dollar versus certain currencies, but it's going to be a mixed bag of goods. So I think the dollar index is going to be a very wide range trade. So if you're trading the index, be very cautious of that. But the yen right now, we have a good chance of correcting down to 108, 107.5 over the next week. I would use caution. I mean, you could go down basically to this low and draw out the 50% marker. 50% rule is always great. I love it, but in this case, especially with a dominating corrective trend now on the monthly basis. And being, excuse me, correct commodity driven, I don't see much of a sell-off. So I think this would be your extreme here. I don't think you're going to get below that. Interestingly enough, in the same part of the world, Australian dollar, US dollar, although the Aussie is gaining a little strength on the dollar today, it has a head and shoulders pattern setting up. So we're looking for a failure here at the 76.17 level. That would take out the neckline, and then a failure from here would confirm new move lows after a lower move high. That's indicative of confirming a lower moving trend, at least in the short run. Now remember, the Australian dollar, US dollar, has been a bull grinding higher against the dollar for over a year, topping out now just a month ago. So does that mean that the top is in? Absolutely not. But we do have a favorable sell pattern that is setting up. Until we get any confirmation of a failure from 76.17, we're not going to really have any downside targets. However, you could look at it where off of this low to this high, if this does become the head, that we can put in the 50% and see at least where we're going to get a challenge of, or a test of. And I think even the 0.618 might come into gear. Remember, there has not been a significant sell-off in the Australian dollar, US dollar currency cross in over a year. So for it just to get down to 74.97 or 73.78, we're not looking for a lot of ground here, folks. But it would be a good spot for the Aussie US dollar to correct down to, especially as oil stays stable or comes back. If it gets below $60 a barrel, that would be huge. As well as if the interest rate stays stable or to higher as far as the 30-year Treasury bond. So we're waiting for that pattern to emerge. New Zealand dollar, US dollar, rather lackluster. We're waiting for a breakout here at 72.72 to the upside or below 70.99. So we got to either take out that last low or that last high, and then we'll look for some targets and some direction. Because right now, as you can see, for the year, it's basically been in a big sideways. I mean, yeah, it did trend from January into the end of February, but it was basically sideways for most of that time period. Also, it was really on only this accelerated move up. Markets come out like they came in, and that's exactly what happened. It went up, it came down equidistant, flattened out, and has been basically doing the same thing. So we're waiting for a breakout to confirm a move. I'm looking for most likely a downside sell-off. Let's look at the US dollar Canada. This one's in a free fall. Now you notice that arrow right there. That's pointing to a short-term buy signal. However, this one's a tough one. The US dollar Canada has been falling like a rock for a year. This is a new move low that could we correct off? Absolutely. Is it ready for one? Well, it's been trading. It's been in a downtrend for over a year. So keeps making lower move lows and lower move highs. That's indicative of a bearish market. So is this going to be, this is a counter trend buy signal where you have, especially with oil and interest rates and gold and some other things that impact the US dollar Canada cross. It's hard to accept that buy signal. However, if you go off the recent swing high, and then you go to our 50%, you can see that we're almost there. And that's why I say there's not much room in this trade here. If there was more profit potential, I would say maybe it's worth being involved in this counter trend. Anything, if we fall below $1.2365, all bets are off. The trend continues as the bear just growls at this currency cross. So I think that the only way you can really start to even get bullish or look to buy or look to buy dips is if the US dollar Canada gets above $1.2751. The trend is just so severe that we can rally up into this pocket here and then fall apart very quickly. Which is more likely to happen, especially if the oil market starts to rally and you see it back on its highs or makes new highs. Like, I'm still looking for $100 oil sometime between now and the next 6 months. I don't think I may not be right on how high it gets, but I still am pretty sure that we're going to get through the highs that we have in right now. So right now we are a short-term bull looking to press challenges 125.51 up to 126. That's about the extreme. Only above $1.2751 do we get bullish. US dollar CHF. This is an interesting market here. Similar to the yen, it has been just a freight train as far as the bulls for the dollar. It has stabilized. I think most of this has to do with the short-term bounce in the 30-year Treasury bond, as well as the balance in oil and gold. That puts this market in a lackluster sideways to lower for the short run. Otherwise, this market is coming off higher move highs. It is establishing a lower move or a higher move low. It has to get all the way back down to like around here, below 89 cents, before you can even consider any low to be a lower move low. So this one right now, is it correcting? Yes. Can it take out this 92.12 and go lower? Absolutely. Will it go much lower? Probably not. So I would watch this oil. If oil ticks up, if the interest rates tick down, or if gold ticks down, then I would be very leery of this trade, because then you're going to probably see a rally back up to 93.76. So that's the one thing you want to key off of. I would say wait for a breakout unless you have, like I said, confirmation in the other markets. Like if all of a sudden you see oil is trading today at I think around $61 a barrel, if it all of a sudden shoots back up to 66, 67, absolutely watch out, you know. So we'll see. We're waiting for the breakout there. British pound US dollar, another one you can see that has fallen into this lackluster oil trade. I would say most likely have to break out above this $40.26 area or fall below $37.82 to confirm either lower move lows or a higher move high, bucking for another challenge of the high that was set back in the end of February. This one is also oil dominated, so if we see a big uptick in oil, I would say be very cautious being short this pound dollar cross, because you will probably see it pile drive through resistance if there's a rally in oil. If there's a big sell-off in oil, the opposite is true. We could still see this correction get extended. So I would really wait to see whether or not oil makes a move for a breakout to the upside to continue that trend, which would help reinforce the bullish US dollar trend, which it is in. It is coming off a higher move high and a higher move low. So right now, this is still in a bull trend and has been for a while. So that's why a breakout of $40.26 confirms higher move highs, and a failure of $37.82 confirms new move lows. So we got to wait for a move. The euro US dollar, the biggest component in the dollar index, which we normally talk about, is stuck in a range trade as well. However, it is making lower move lows, lower move highs, coming off of a lower move low and a lower move high situation. The breakout is the key. A failure from $1.1834 keeps the trend lower, with the euro US dollar targeting this 117 down to 116.5 area. If we get above $1.1936, then I think you're going to see a pop up to around $1.21. Just because we break out to the upside here, it could still just be an extended correction. I would key off of the interest rates. Like I said, this is one where because of the stabilization in gold, interest rates, and oil, where they've had corrections against the trend, if they may push these corrections. Should they do so, that will probably continue to lower the euro US dollar. However, if we see a reversal of fortune, the opposite is true. So we're going to wait for a move. Do not look at the euro in relationship to the pound. Remember, we are in post-Brexit, and that is a big deal as far as what's going on. So there are definitely geopolitical factors between the pound and the euro and the dollar. But I would say be very cautious about playing on those things right now. Just use the markets as your indicator, because there's too much ambiguity into what is going on with politics right now, and until we have a little bit more clarity over the next couple of months, I would stay off that trade. The coronavirus lockdowns are definitely impacting the EU economy as well as the UK's. One is not backing up the other now, so it will be interesting to see how things pan out. I think that we are, because the U.S. markets are holding up, they are holding up. If you have a major correction or sell-off in the U.S. markets, I think these their markets will get pounded. So that would not be good for the euro, as well as the pound, or definitely the euro and the Swiss, because they're buying up the bond market with helping the ECB as well as the currency, which they stopped doing over a year and a half ago. They're doing it now again, so that's why the Swiss is weakening as well. So there's a lot of variables like that that are coming into play, so we'll have to watch those. Remember to key off these breakouts. As soon as we have a decent signal, we will let you know. Since we don't have any questions for the webinar, we got some people on the chat room, but no one's asking any questions. So I think that is it for today, folks. We're going to see we're wait for a move and see what happens. It's kind of a quiet morning. All right, so one more time to remind you, please subscribe to our Twitch and YouTube channel if you have not done so, and like them and pass them on to your friends. Don't forget to share it, and hit the notification button too, so you're reminded of when we have new webinars coming out live. So with that being said, I'm Teddy Keckstedt from Forex Trading Online.